Thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. Good morning. And let me just briefly get you the key news before I get our guest on the show today. It's important. While the markets have just steadied out a little bit, these things are always unpredictable. So key news, the Fed minutes have shown that the Fed is prepared to hike interest rates and reduce its balance sheet soon, but it is as anticipated. I don't think the markets even batted an eyelid when this piece of news came out. It's certainly underwhelming, if you will, if you are expecting overwhelming news from the minutes, so to say. Oil slid amid signs that Iranian nuclear deal is getting closer, or maybe other reasons, and Peter Maguire, our guest, would be the best place to talk about it. And dollar index is trading at key moving averages. I must say, from people who hate volatility, they would be hoping that the dollar index breaks those moving averages and heads even lower, if you are an Indian or an emerging market investor. But let's get in our guest, and of course, keep in mind that how I said that the Fed minutes didn't do anything to the US market, so they were very, very flat as well. Peter Maguire joins in to talk about all of this. Peter, great having you. Thanks for joining in. I hope all is safe out there in Sydney.
Absolutely, Neeraj. Lovely to see you, and our same best wishes to everyone in Mumbai.
Yeah, thank you. So, Pete, tell us, do you reckon that the world is reconciled to the fact that we are out of the war zone, if you will, and would risk premia across asset classes adjust accordingly?
Well, I think they're certainly right, Neeraj. I feel as though that's probably happened over the last 24 to say 36 hours, that wake-up call. And as quickly as it winds up, it certainly is easily wound down. And we all want that. There was, people worried there as far as kinetic warfare. So let's put that from a humanitarian side and park that the best wishes for everyone is that it ends peacefully, and that seems to be the feel at the moment, and that's been demonstrated in that wonderful barometer, Neeraj, called crude oil. And we've now got Brent sitting under 93. You've got WTI at about 91.5. So that's a good sign, and I think it's a good sign to the consumer.
Yeah, it certainly is for the consumer and for an economy like India, Peter. It's a great sign. Just since you brought that up, Peter, 100 was looking like a certainty. If indeed there are no further forwards on the geopolitics, do you reckon we've made a bit of a near-term top on crude, or are there other triggers which could bring about? Because Bloomberg today was reporting that the Iranian nuclear deal and the world getting closer to that being signed as well might actually help crude prices because the supply situation might improve.
Well, you would think so, Neeraj, from a geopolitical standpoint and the nuclear issues engaging Iran, that yes, if that was a sign off there, then certainly you would see again further, in the sense of risk premium being stripped out of the market. But a couple of things that we can't get our mind away from, and that needs to be very much considered. We're talking about being at tank bottoms as far as supply. We're understanding as far as supply underinvestment left the world and the market very vulnerable. That's across the crude sector globally. We've got the entire complex is extremely tight. And then you've got super backwardation for a number of those across the Brent market, and certainly WTI recently. So that's a consideration that one needs to be conscious of moving forward from a trading perspective. And the upside risk still is high. I don't suggest that we're not going to go back there, because there could be other spikes, but that's what a trader's got to be conscious of, Neeraj.
Okay. And Peter, what is it that you're watching out for the next few days? The Fed meeting is in March, so that's about a month away or thereabouts, or less than a month away. In India, we've got the elections as well, but that's separate. That's a niche. What is that you're watching out for in terms of high frequency indicators in the near term?
Well, it had to be very much the situation in the last matter of days as far as Ukraine and certainly Russia. So that was something we were worrying about, the thought processes from the Fed, and worrying certainly from the FOMC members. They're very conscious from a inflation standpoint that beyond the pandemic, it's reached across or affected all sectors of the US economy into the broader economy, being high energy prices, inflation, food, stud lumber, construction costs, you name it, everything's costing more in the US, so then inflation's galloping away. So the Fed are conscious of that, and how quickly, if you look at Jamie Dimon, you think, well, Jamie's coming out 2 weeks ago or so and said we're going to see 7 rate rises. little old humble me and humble everyone else is saying, wow, if that's going to happen, then expect some, I think, boom times to the upside for US dollar, for bonds, and again for the volatility, Niraj.
Well, we can do with a little bit less of that, but be that as it may, it is something that I think everybody would keep a keen eye out for. Peter Maguire, always good having you. Thank you. Actually, before just I let you go, Peter, quick 30-second answer. Is it possible to try and second guess, even for an expert like you, what could be levels that which crude could settle in, or is it just too many moving parts right now to try and factor that in?
I think it's moving parts, but also, Niraj, we've got to be conscious that it can spike, and you could see a couple of dollars added off this, because as your markets come down, they can bounce from that low. So you could see another dollar or two pushed up, or you could see continual downdraft. The issue is geopolitics, risk premiums, and if nothing happens across that global footprint, then you could see the market slowly edge lower from here.
Got it. Okay. But largely difficult to predict as well. And Peter Maguire, thanks for laying out all of those factors for us, and much appreciate you joining in today. Have a great afternoon.
God bless you, Niraj, and to everyone. Thank you.
Yeah, thank you. Well, those are good wishes for sure. Okay, God bless the markets for sure, per se. There's not too much of volatility. Yes, the NASDAQ, etc., all recovered. Keep in mind that while they have been at levels that they were, the intraday recovery in some of those was pretty strong post the Fed minutes got released, and no negative surprises there. Asia and SGX Nifty will come up on your screen next. I doubt there is too much of volatility there. In fact, the SGX Nifty, the last time I remember checking it, was up about 60 odd points. So we have a start, 51 odd points. We have a start in the green for sure. Let's see if this lasts. Now, what's the trade setup there for the day, according to me? Well, I think the index resisted surpassing the 17,500 mark, and that probably is a sturdy wall for the index to try and break out of. But I do believe that the market setup gives the risk-taking bull a chance for leverage longs. All through the last few days, I've been of the opinion that don't take leverage longs. Yesterday and today, somehow get a feeling looking at the screen, talking to dealers, looking at quant indicators, that there is a chance for leverage longs as well if you're a high risk taker. So keep that at the back of your mind. Certainly don't be short at the current point of time. And much as I said that the lack of the moves in real estate remains questionable about what's the kind of strength there, voila, we had a sharp up move in a bunch of real estate stock yesterday. So that space comes back in favor. It's been a pocket that most people are indicating that they would want to buy simply because inventories are coming off. The bookings almost every single month across cities are looking very strong. Matter of time before real estate companies hike prices, simply because it is a factor of supply and demand. And the large listed, well-entrenched players have an edge over the local developers, a large part of local developers under any sense whatsoever, any which ways. So keep in mind, don't let real estate get out of your mind space. It's a pocket that is certainly seeing some serious buying. I was really surprised it didn't bounce back on Tuesday, but yesterday was a strong move for some of the real estate names. Foreign investors, however, continue to sell. 1890 crores sold yesterday versus 1180 crores bought by DIIs. Certainly that 4,400 crores seemed to be having a flavor of this. A day before yesterday, the DI buy number seemed to be having a flavor of the Cipla deal. Earnings today included Ambuja and Nestle India, so watch out for both of those. And among stocks to watch, not too many large, actually a mix of large and small ones. First, JSW Ispat Special Steel. They're going to acquire 100% equity of Mivan Steels and will hive off their plant along with certain other assets to Mivan Steels via slump sale for 450 crores. The question that comes to mind, and I'm sure they would have a good reason maybe, I'm not sure, I'm just saying that they would have good reason maybe, but MSL is a wholly owned subsidiary of JSW Steel. So JSW Ispat is acquiring 100% equity shares of a subsidiary of JSW Steel for a certain amount. They're going to hive off the plant with certain assets that they have to that subsidiary. Of course, since they're acquiring 100% subsidiary, it doesn't matter really per se. But they should do well to explain the transaction. Unfortunately, the press release doesn't have too much. So maybe it's all kosher. I'm guessing with the governance standards that they have, it would be all kosher most probably. But I think there's some explanation needed out here. At least that's what people that I spoke to also suggested. Let's wait and watch if this one has any reactions. Wipro, the reason I bring it up is it shouldn't have a reaction. You might see this news across that they've awarded a 5-year strategic engagement for ABB's information systems transformation. Is just 1,100 crore deal, nothing large at all. So please don't believe that this will move the needle for Wipro too much. Jubilant Ingrevia is a different kettle of fish altogether, though. They've commissioned a new nicotine derivatives facility at its manufacturing site in Uttar Pradesh. Now, it might seem normal, but I thought the view from an analyst who tracks this is interesting. So they say that Ingrevia, by virtue of this, can comfortably utilize the entire capacity by FY23. So it takes about a year to ramp up, but by then they will use the entire capacity, and the incremental revenue stands at 150 crores for Ingrevia. Phase 2 of this facility will also be significantly margin accretive. And they say that given the transition towards specialty and growth on the back of the new capex commercializations, there were a bunch of other commercializations lined up in FY23. This house believes that Jubilant Ingrevia is attractively priced as it trades at only 9 times FY23 EV EBITDA. Now, if the math, their assessment of what the EBITDA is for FY23 turns out to be 2, then 9 times FY23 EV EBITDA is certainly not very expensive for a company which is making a transition towards becoming a specialty company from a not so specialty company. So pretty interesting. Let's see if Jubilant Ingrevia has some does some moves today. I thought the numbers were also very strong, which came out 10 days ago. So do watch out for this one. Do watch out for Tata Motors. JP Morgan has initiated the coverage on the stock with an overweight rating at a target price of 630. They're saying that the company's demonstrated a commitment to balance sheet deleveraging and structural strengthening of its business, both in the JLR and India since 2019. They believe the company can achieve the zero net debt target by FY24 versus about 60,000 crores currently by continuing to execute the self-help strategies that they've embarked upon. That's a bullish note on Tata Motors. Do watch out for this one. I haven't given the numbers of Schaeffler India, but I thought the numbers were very strong. So that's the other one that you got to monitor. And keep in mind, viewers, that while Schaeffler India might have a reaction, SKF didn't have the best of numbers. We speak to the management today at 9:30 or 10 a.m., one of the two. You might want to tune in for that. Some other stocks and focus include companies where we've seen some promoter buying in the last few days. So Nahar Polyfilms, it's a 900 crore company. But the promoter group Nahar Spinning bought about 15,000 shares on Feb 14. Mastech, Ashank Desai, bought about 5,000 shares on Feb 14 and 15. Quest Corp, Ajit Isaac bought about 1.32 lakh shares on Feb 15. And Star Cement is the other one wherein promoter Sajjan Bhajanka bought about 2.26 lakh shares between Feb 14th and 15th. Now, some of these could well have been inter-say promoter transfers. I don't have the exact handle on that, but most of these have seen promoter buying, so I thought I'll bring it out to the viewers. Please try and do your due diligence, do a little bit of check. Really, I didn't have the time to figure out whether there's an inter-say promoter transfer or otherwise. So you might want to just do that, but keep these stocks at the back of your mind. Some buyback stocks, and you should maybe keep these in mind as well. If you are wanting to participate in the TCS buyback, which is priced at 4,500 versus the current price of 3,800 or thereabouts, the record date is 23rd of Feb. For KPR Mills, it's 19th of Feb. For FTC, it's 19th of Feb. For Gulf Oil, it's 21st of Feb. And Mayur Unicoaters, it's about 23rd of Feb. So those are a few stocks that you should keep a keen eye out for. Some stocks which were gaining in trade the last few days, I thought we should bring them for you. Let's stick with this for a moment. Then we move on to the other stocks. So watch out for all of these record dates, viewers, just so that you don't miss out on them. In case you want to participate in the buyback, you got to keep in mind the acceptance ratios might be separate for different companies. So also please read up on that. The record dates are important, really, especially for TCS. 23rd, if you buy it post that, you won't be able to participate in the buyback at 4,500. Some stocks which stood out for me based on the price and volume action include a Crest Ventures, a Pheniotex Chemicals. I think I've got the spelling wrong there. And Magnesita. I brought this yesterday as well. I'm bringing it today because 2 days on a trot now. It's got some very interesting price volume action. This is the erstwhile Orient Abrasives, so Orient Refractories, sorry. So watch out for that as well. And last but not the least, the Nomura note on Ipca Labs was interesting. They've upgraded the stock to a buy. The target price of 1194. They've upgraded on favorable valuations. They believe the strong execution in domestic formulations and market share gains in key molecules are positives. They're saying that the management expects gross margins to sustain the current levels, but overhead costs may rise further in the near term, which might be a temporary overhang. But they think that the domestic price increases and easing of inflationary pressure in the medium term could improve EBITDA margins. Do watch out for Ipca Labs. If it reacts, you know why. That's the long and short of it. a bit more constructive looking at the screen and talking to local dealers. Trade carefully though, and if you're stepping out, please stay masked up. Thanks so much for tuning in today.